Hi, here's a quick update. It's 1:45 UK time on Friday. And here we are in the midst of the expiries. This is where the quarterly options in Europe and the US, Europe's already done, US is happening at the moment. A couple of weeks ago, we looked at this week as potentially being an inflection point, maybe where some of the volatility will roll off. We had the VIX expiry on Wednesday as well. And certainly things have dampened down a little bit, but we don't think that's the end of the game. But I do think it may be the first phase is sort of coming to an end. And the first phase is this sort of rapid deleveraging phase. It was the economic crisis becoming a VAR shock and also a funding shock. And what we've seen is basically just liquidation from longs with a few bounces from the algos. I think what's interesting now is that some of the hedge funds who actually have only just moved to flat from being long are now going to start approaching this from the short side. So that's going to put some downward pressure again into any rebounds. But it also means that we might get multiple day rebounds because these are the guys who are now short the market, but when it rebounds, they'll have to unwind. So there will be some shorts to bounce back on. So I think we're in this second phase. But the important thing about all of this is still the framework that we're in. Most people are looking at this as the short-term shock from the coronavirus. But actually the key thing here is now the big shutdowns that we're getting and what we've been talking about in terms of the dash for cash and the fact that cash flow in many areas is going to go to zero. The playbook that's being used is the 2008 playbook. That was to fix the banks. The banks today, although they're going to struggle because of the economic environment, they've got much higher cash buffers. They're not as leveraged as they were. In fact, if anything, they can collect the cash that the central banks are offering, but they don't want to lend it out, so they're hoarding cash. The real problem is how do you get that cash to the real economy and to the shadow banks? Well, I think that they're dealing with the shadow banks. These are the market makers and firms that have stepped in place of the original banks, investment banks of old. And you can see how the asset managers are struggling. And we've obviously seen this breaking apart of the investment structure that's been in place for the last 10 years. We've seen this quite incredible rebound in terms of the banks versus insurers. Now, insurers nowadays in Europe are often asset managers. Banks underperformed, but over the last week, the insurers have massively underperformed the banks. So the banks have bounced back, giving a little bit back today. But that shows you that it's the asset managers rather than the banks where a lot of the problems are now being found. And the important thing here is how do you get the capital or the cash from central banks to the real economy, to floor sweepers, to window cleaners, to bartenders. It's not the banks that need it, it's the real economy that needs it. And this is why it goes back to what we said before. We've got to look here at what's happening with the dollar. The dollar moved from being partly risk off versus euro and yen, whilst being, as in the euro and yen rallying, and everything else selling off versus the dollar, to now the dollar being strong against most currencies. Again, today a little bit of a pullback, but what we haven't yet seen is dollar rallying against everything. I think that is ahead of us, and that's going to be part of this real world need for cash. And people are looking at the US and saying, well, they're printing, therefore dollars should go down. But Japan, all of Europe, including the UK, all these countries are printing as much, if not more, per unit of GDP. So there are more non-dollars than dollars being printed. And a lot of people, because the global economy outside of the US is still dominated by the dollar, they desperately want to convert some of these non-dollar currencies into the dollar, which is why we're seeing extreme moves and gyrations in the cost to swap other currencies into the dollar. The big problem here is we could see a massive shortage unless the US is able to print lots and lots of dollars, enough to satisfy the rest of the world, which is probably going to see 1 or 2 months of a complete shutdown in the economy. So let's look at the dollar. That's the big thing from here. The dollar probably is going to, well, the dollar wants to go to the upside. There's a lot of demand for dollars in the international euro-dollar environment, the world outside of the US. It's getting tight out there. And I think that's the next phase that we watch for. On the equity side, I think we now can see some bigger bounces, ones that will be maybe 1 or 2 days, maybe longer, because more people are now getting short from the active side, who will get carried out when we get the squeezes. So it's a slight shift that we're seeing. I think we can come out of the expiry into that slightly new environment. But the key thing here is the world is starved of cash. We're having a cash crunch. It's in the corporate world and not the financial world. It's in the real world and not in banks.